to demonstrate this is in all of this chaos, if Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail.
Chamath Palihapitiya, a billionaire venture capitalist, has expressed his doubts about Bitcoin's potential as a viable alternative to the current financial system. Palihapitiya questions whether Bitcoin has gained enough global users to truly pose as a substitute for traditional banking systems. Additionally, he notes that if Bitcoin was truly a solution to the concerns over the US dollar's dominance and banking stability, the price of Bitcoin would be much higher than its current value of $28,473, especially considering that it was worth $19,662 on the day that Silicon Valley Bank collapsed. Palihapitiya criticizes the Federal Reserve for raising interest rates by only 25 basis points in the midst of the financial crisis in the United States. He believes that the Fed should have increased the rates by 50 basis points to reveal the underlying flaws in the system, despite the short-term panic that it may have caused. Palihapitiya emphasizes the need to address the fundamental issues in the financial system rather than relying on temporary fixes. However, even though he's a big proponent of Bitcoin, he has stated that he does not believe that Bitcoin is the solution. Before we listen to him, please smash the like button and subscribe to the channel if you are yet to do so. Thanks for watching our videos.
MMT was, in hindsight, idiotic. In the moment, it never quite made sense, but in hindsight, it's clearly idiotic, and I think that we can properly dispense with that. But the reason that we print so much money is sort of what Freeberg says, which is that we just want a well-functioning society. And the simplest and shortest way to do that is to make sure that there aren't any winners and losers anymore. And the most effective way to do that in the markets is with money. Print a bunch of money and there are no more winners and losers. And so everybody can kind of win. Some people may win more, but nobody really ever loses. So I think that's the MO that we're operating under. The thing is, I don't think that...
There's something unhealthy to that, Chamath. You're sort of alluding to no losers.
That's a more philosophical and a commentary on capitalism and a bunch of other things. And you're right. I don't think it makes sense. I do think you need winners and losers to really make society function well. But the other part of it is like, does it reinforce or does it decay US dollar hegemony? And I think it actually reinforces it. And the reason is just very practically speaking, when you look at how dependent other people, other countries are on the US dollar, in times of stress, they actually become more dependent. And that has a lot to do with their borrowing patterns, the amount of dollars central banks need outside the United States. And so what did you see in a moment of stress? Actually, the Fed opened up swap lines to all the central banks that they work with, their most important operating partners, so Europe, Canada, Japan, etc., Switzerland. And they moved the liquidity window from weekly to daily, and they pounded the swap lines. So I don't know. I think that most people that kind of like, it's like a boy crying wolf. Maybe at some point somebody will be right, but you're going to lose so much money trying to take a point of view around this topic that it's more practical to just look at dollar flows. And dollar flows go up in moments of stress, not go down. And they go up in a distributed manner across the monetary plumbing of the world. That's the latter. I mean, I think that there was a rumor going around, I don't know how true it is, that FTX was days away from getting a critical approval by the SEC to actually even further legitimize their US exchange before they went out of business. So I think Gensler had to pivot very hard from, at a minimum, being very pro FTX, and there's all kinds of stories about his interrelatedness with Sam and his family, to very anti-bit or anti-crypto in general. That's clearly happened. But look, I think that this is like a lot of tin hatting, which I don't think is very productive. If you look at the total number of non-zero Bitcoin wallet addresses in the world, and let's be extremely generous and say it's 100 million, there's still 7 billion people in the world. And so I just think everybody that tries to speak about the fragility of the US and worldwide banking system is right, but And that part I think is quite lucid and unemotional. But every time they try to connect it to Bitcoin, they sound like a crazy person because they're just talking their book.
And that is exactly the case, by the way, with this kid, Nick Carter. Yeah.
And the best example to demonstrate this is in all of this chaos, if Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail. And they're just day trading this thing. How else do you explain an asset that is not absolutely ripped in the face of all of this terrible news about the financial system? And I think the answer is because it's still a cul-de-sac of users. It's not broadly available, not broadly adoptable, not broadly used. I still believe that it's valuable. I was the earliest proponent of Bitcoin, 2011. 2012. So I believe that there's a place for it in one's portfolio, but I just think connecting these dots misses the point. And I think the point is much, much bigger than a crypto off-ramp. The point is that we have a lot of systemic shocks that are building up in the system. We have broken a ton of the systems that cause the financial infrastructure and the world to work properly. And we are just starting to uncover how they're broken. So I think we need to focus our energy on that and dial down a little bit of the Bitcoin maxi stuff because it distracts from a really important set of topics that are more inclusive and actually touch 7 billion people. My point is put this in the who cares bucket and get back to the facts. Friedberg mentioned it. We have a debt ceiling problem that's in the offing. Sachs mentioned it. We have a commercial real estate crisis. We just talked about the fact that he didn't raise rates enough, nor did he cut enough. So we're in this weird middle path that Jay Powell we're talking about. So those are the facts on the ground that I think we should focus on because those will have implications to how people can borrow, start businesses, capitalize risk assets. That's a big problem.
Regardless of what Chamath says or thinks, Bitcoin remains the best protection against interest rate hikes and inflation. Bitcoin has been gaining more and more attention as a potential hedge against rising interest rates from the Federal Reserve. As the Fed continues to raise interest rates, investors are looking for ways to protect their wealth from potential inflation and devaluation of the US dollar. Bitcoin, with its decentralized and limited supply, has been seen as a possible solution to these concerns. One of the main reasons why Bitcoin is considered a good bet against Fed interest rate hikes is its fixed supply. Unlike traditional fiat currencies, which can be printed or manipulated by central banks, there will only ever be 21 million Bitcoins in existence. This means that as demand for the cryptocurrency grows, its value should also increase. Furthermore, Bitcoin is decentralized and operates on a peer-to-peer network, which means that it is not subject to the control of any single entity or government. This makes it a more resilient store of value in times of economic uncertainty or instability. Another reason why Bitcoin is seen as a potential hedge against Fed interest rate hikes is its increasing adoption as a payment method. As more merchants and businesses begin to accept Bitcoin as payment, its value is likely to increase further. This increased demand for Bitcoin could help to offset any potential negative effects of rising interest rates. Finally, Bitcoin also offers users the ability to control their own finances and investments. With traditional banking and financial systems, individuals are at the mercy of the decisions made by central banks and governments. However, with Bitcoin, users can manage their own finances and investments, giving them more control over their financial future. Of course, there are also risks associated with investing in Bitcoin, including its volatile price swings and the lack of regulation in the cryptocurrency market. However, for those looking for an alternative to traditional financial systems and a potential hedge against inflation and interest rate hikes, Bitcoin remains your best bet. Thanks for watching. Till our next video, stay savvy.